Hey guys, welcome back to the channel. Welcome back to another coffee hour where we're going to go over market news and how that's impacting our stocks and everything else in our portfolio. So today it's mostly going to be macro driven news. All right, there was some breaking news that just came out, so I'll be covering that just in a moment regarding the Iran conflict. And we'll be going over kind of just, like I said, broader market macro news. There really wasn't a whole lot of, individual stock news. I mean, there was some, you guys know, you guys are feeling it, right? Everything is selling off. Just there's nowhere to hide in this market, unless you want to invest or unless you are already investing in like more consumer defensive type of stocks. So we're gonna have hopefully a good stream. All right, I'm glad to be back. Hope you guys enjoyed your weekend. Hope you guys are doing well, and of course, keep up that red light therapy. Hopefully, we get some green light therapy here in the very near future. All right, so just want to say hi. Oh, we got Gary in the chat. Hey, Gary, welcome back. Appreciate you joining. All right, if you guys have not checked out his channel, really recommend you guys check out Gary Gill. He does put out some really banger content. We also have Rod Stamon. Hey, welcome back as always. Appreciate you joining. All right, guys. Well, let's get into it. Let's get into the stream. Shout out to the 6X viewers and the 10 YouTube viewers. Always appreciate you guys joining for the stream. All right, let's get into it. Let's move over here. Bingo, bango, bongo. All right, cool. So first up, we have the heat index. Okay, actually, futures are looking up because of the news that just came out, which again, I'm going to cover here in just a moment, but it looks like everything's starting to turn green. All right, but this was a really, really red day. Okay, this was pretty damn nasty. I went to bed. We looked like we were climbing up, right? Iran had published some trading, advice saying, hey, basically, was it go long or whatever. So, I mean, this is 2026, guys, when the Iranian parliament is giving U.S. traders stock advice, right? Like this is 2026. Absolutely insane. Anyways, it does look like we're actually starting to recover. So, but tech was absolutely just demolished today. The semiconductors were absolutely demolished today. Just want to check real quick on futures. As you can see, everything it looks like it's starting to climb up on this breaking news that's coming out of the Trump administration. Energy is still looking pretty high. I really think that probably there is a high possibility that the market just is tired of all of this, boy or man who cried wolf, because you have President Trump, you have the Trump administration, the U.S. saying one thing, and then you have the Iranian government saying another, right? Somewhere in between there is the truth. You have the Trump administration saying that they are negotiating with the Iranians, for the possible end of this war. The Iranians, on the other hand, are saying that they have not been talking to them for 31 straight days, which, somewhere in the middle is the actual truth, right? Is there some conversations happening or taking place? I'm sure there are. There is still plans for JD Vance to head to Pakistan, to mediate these talks and hopefully conclude this conflict. But moving on from that, just over the last 5 days, we still see that the rotation to energy is still strong. All right, the rotation to energy is still very strong. And this doesn't tell. Oh yeah, the last update was for March 27th. March 26th was the starting price. All right, so we still see that energy is still very, very strong. I see from Padre, retail is certainly tired of one color dictating the market, orange. That is right. That is right. And Rod Stamon says they both are full of malarkey. That is one thing they're full of. All right. So anyways, we see that energy is still doing very, very well. All right. Over the last month, it is the strongest performing sector year to date. All right. Just nothing is stopping energy. All right. Up 39, almost 40% year to date. So shout out to anyone who did get into energy stocks or energy, ETFs like the XLE ETF. You also have, some energy stocks out there that have been doing fairly well. Again, there's shipping out there. There's oil stocks, a lot of those types of companies. ExxonMobil, you have Shell as well. You have a couple other ones out there that have been doing very, very well. So anyways, S&P 500 down 39 basis points for the day. All right, didn't have a really good start. Actually, we saw this head lower, much lower, about a 1.5%. I mean, that was a pretty brutal sell-off. And then just right around, towards the end of the day, it started to peak up a bit. And then now in futures, as you guys can see, we are looking very, very good, right? Very, very good. But again, I think this is probably going to be a fake out. We'll see. The Trump administration, you just don't know, right? Between them and the Iranians, you just don't know where this market is really going to be heading or who's telling the truth. So we have the QQQ tech heavy, all right, year to date. Still down substantially, almost 9%. All right, heading into correction territory. Over the last 6 months from its all-time high, we actually are in correction territory. All right, so we are down almost 12%. Where the S&P 500 over the last 6 months, if we could take that high, it's probably right there, and down almost 9% or a little over 9%. So these indexes are still heading towards correction territory. I personally don't think that even if the conflict ends, we're gonna just see this massive V-shaped rally. I don't know that for a fact. I'm just having trouble seeing that happen. Tech sector actually did really well, or the tech software sector actually did really well for the day. All right, up almost a full percentage point. Year to date, still down about 24%. Okay. Moving on, we have the semiconductor ETF, which I don't really cover as much on the live streams, but I wanted to take a peep at that today because SMH has been getting clobbered, absolutely clobbered. Year to date, it's just down 2.89%, but over the last 6 months from its all-time high, we see that it's down almost 15%, right? So this could be, again, if it continues to break and continues to trend lower, this might be an interesting opportunity for people who wanted to get into the semiconductor space. All right, for gold, we are down just under a couple basis points. All right, nothing too bad here. Over the last 5 days, we're still doing well. Year to date, still the best performing asset year to date. Silver, same thing. Silver was down, or actually just up a few basis points. Year to date, still down close to 3.3%. Had that really crazy blow off top. And then, it just has not recovered. All right. But fundamentally, the story is still there. I'm still very bullish on the metals and commodity sector. I just don't want to be adding, me personally, I just don't want to be adding much. I did add to my copper position, my copper miners position, ticker COPP. Don't use me. Don't use my conviction. Do your own due diligence, of course. Right. But the people I follow and kind of the things that I'm looking out for, Rick Rule, really good, intelligent subject matter expert on this whole industry. Recommend people check him out. But I do like the story behind copper, right? I really do like the story behind copper. Not enough copper mines, right? It's pretty much been neglected over the last 30 years is pretty much the story. So not enough copper out there. And with the United States and all these major powers looking to upgrade their infrastructure, right? Data centers, you have the electrification or upgrade of the power grid. I mean, that's going to take a lot of copper, which does not exist. Okay, so that is the story with at least copper, right? Same thing with silver, all right? A lot of electronics rely on silver, a lot of drones, a lot of missiles, a lot of defense, national security type stuff. That all depends a lot on silver, right? So it's an industrial metal. And again, not enough metal, not enough silver out there. So for Bitcoin, which is my favorite right now, we had a really sharp sell-off. I'm sure you guys know, right? We had that really bad sell-off last Friday. And, over the weekend, it kind of just hovered and looks like it's starting to bounce back. But I did add to my IBIT position. I'm still waiting for this to come down a bit. I really think we're probably going to be seeing, at least the 50s range. I don't know where, probably the mid 50s, 55 to 58. And that's where I'll be adding an additional large amount, right? So that is pretty exciting. I know there's probably some people who bought at the top. I bought at the top, right? Obviously, I'm feeling the pain, but I am super bullish on Bitcoin. I don't know where this conviction is coming from. Maybe I've just been orange pilled or whatever. I've been orange pilled to death, but I just have such a strong conviction in Bitcoin. And based on everything that's happening in the world, it just makes sense to have Bitcoin. But again, do your own due diligence. Do not borrow my conviction, as British Hodl would say. Let's see. I see you guys are checking out my new red shades. Actually, it's because my eyes are killing me. All right. Looking at, screens all day, looking at my phone all day, the blue light. So my eyes are absolutely destroyed at this point. So now I have to use, I had these yellow lenses, which I would use. I would have these yellow lenses, which I would use before at the start of the stream, but they stopped working. Like they just don't filter it out as well as I was hoping. And I bought these new lenses in order to help with the kind of the glare and everything else. But appreciate you guys. Yeah, I should just wear these shades. I should get some green shades as well. So I'll wear these shades when the market is bad, and then I'll switch to green. Maybe that'll be, or maybe I'll do it for my name here on the StreamYard logo. So anyways, let's see. We also have yes. So let's check out BWET. So yes, BWET is another ETF that's very notable. We can take a look at that real quick. Chart. There we go. BWET chart. So this is the tanker shipping ETF. They basically do futures within the ETF for shipping companies. And we can see year to date up 553%. Nothing is stopping this ETF. All right. Nothing is stopping this at all. Over the last month, up 67%. My God, this is a crazy ETF. 553%, man. Imagine just YOLOing 100K into this thing. My God. Anyways, as they say, right, as we all have learned, especially with Micron, over the past year, up 1,000%. As we learned with Micron, the steeper, or even silver, right? The steeper the incline, right? The deeper the decline is going to be, or the faster the decline is going to be. So, practice a little caution, right? There is still a huge story behind this one, especially because it's geopolitics, Iran, et cetera, right? So that is what is causing this. I mean, shipping rates have skyrocketed because of what's happening in Iran. So I could see why this BWET ETF is doing so well. All right. Anyways, moving on from that, let's see what else we have. Okay, like you got into a bar fight, man. No, no bruises over here. All right, no bruises over here, my man. Blue light, right? The blue light is affecting my eyeballs, so I have to wear some red shades or some yellow lenses. Anyways, yeah, my eyes are doing terrible today. Like I'm looking at my phone and my eyes feel like they're just getting pinched. Like it hurts that much. You can throw on the yellow filter, like on what is it, like on Android devices? You have like the yellow filter that they overlay that they could put on, but I mean that doesn't help. That doesn't help at all. So, anyways, let me get a sip of this coffee and then we'll get right into it. Okay. All right. So first up is from Disclose TV. Okay, and this actually, you know what? We'll just do this. We're talking about Jerome Powell. So Jerome Powell was speaking today. All right, he had a not a press conference, but he was at, I believe, Harvard, if I'm not mistaken. I want to say it was Harvard. But anyways, he was at this college, basically just, giving his thoughts on everything and talking with them over there. But this one was rather interesting. And this is, again, adding to at least my personal thesis, my personal bull case for having Bitcoin and gold in my portfolio. So Jerome Powell on the $38 trillion basically $39 trillion U.S. national debt. We don't have to pay the debt down. We just need to have primary balance and begin to have an economy actually growing better. It will not end well if we don't do something fairly soon. So let's listen in on what he had to say.
I don't think we know what that number is, sort of ratio of debt to GDP, where it would be a problem. There are, of course, Japan being a great example. There are countries that have much higher levels of sovereign debt to their GDP than we do. What's clear is that our debt is growing much faster. The federal government debt is growing substantially faster than our economy, and that ratio is going up. And, in the long run,
debt is growing faster than the economy. All right. The debt is growing faster than the economy. That's coming straight out of Jerome Powell's mouth.
And that's kind of the definition of unsustainable. The level of the debt is not unsustainable, but the path is not sustainable.
So I'm sorry to keep pausing, but I have to hit these key points, right? Because it just shows, why should you invest in Bitcoin or gold? I mean, this is the reason right here. He literally just said, let's replay that real quick.
Path is not sustainable.
The path for the debt is not sustainable, but the debt is sustainable. I mean, What? Like, what? Really? Anyways, our children's children is going to be paying this debt off well into the future.
And so it's really important that we get back to, we don't have to pay the debt down. We just need to have primary balance and begin to have the economy actually growing better, growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not the Fed's job, of course, and I pretty much limit myself to those high-level points which essentially everyone ignores.
So he's saying, and you guys are well aware that, right? It's monetary policy is driven by Congress, right? It's driven by the president, driven by the Senate, driven by the House of Reps, right? That is alarming, to say the least. That is very alarming. His thoughts basically are pointing to a need for, at least in my opinion, for investors to consider gold in their portfolio if you want to hedge against fiat and keep a value, right? Keep value in your portfolio. That is just absolutely alarming to hear that, right? A store of value is what I was looking for. So there's that. And of course, people talk about digital gold, right? Bitcoin being another store of value. And I know Bitcoin has not been doing well these last couple of months, right? There's just been this really large narrative around it. Is it because of the 4-year cycle? Is it because of institutional adoption? Is it this? Is it that? Blah, 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 right? There's a bigger case to be had for Bitcoin in my mind. And the reason, if you wanted a volatile asset with a 30% return over many years, then that could be something to have in your portfolio. But the downs are really down and the ups are extremely up, right? But not only that, I mean, it's a bet on the fiat currency system basically failing, right? Or US debt just going out of control. And it already has gone out of control. I mean, we could pull up charts where you just see it's a straight line. It looks like that BWET ETF we just looked at, where it's just a straight line up with US debt. It's absolutely disgusting. And for me personally, that is why I hold, Bitcoin and gold. It's part of this whole debasement trade. But Bitcoin also, I don't hold spot Bitcoin. I hold the ETF version. I'm an investor. I don't believe in the whole, I don't believe in I'm not a Bitcoin maximalist. I don't believe in the romantic story that it's going to become the world reserve currency. I just don't see that happening. Can it happen? Is there a case for it? Sure. I'm sure there is. I just don't see it happening, at least in my lifetime. I'm just trying to make a buck and add, some alpha to my portfolio. So anyways, that was Jerome Powell on the $39 trillion of national debt. Okay, Bill Ackman actually came out and posted this. Some of the highest quality businesses in the world are trading at extremely cheap prices. Ignore the MSM, one of the most one-sided wars in history that will end well for the United States and the world. And we have the potential for a large piece of dividend. One of the best times in a long time to buy quality, right, stocks. Ignore the bears. All right. So this is Bill Ackman. For those who don't know Bill Ackman, he is the billionaire investor and founder of Pershing Square Capital Management. And I believe that company or I guess that company or fund, whatever, is actually trying to go public. They're actually trying to IPO. So that will be very interesting, something to keep in the back of your minds if you're a big fan of Bill Ackman. So just wanted to cover that because we're seeing some big names start to really sell off. I mean, you have Microsoft that sold off. You're starting to have, some of the more the Mag 7 companies start to come down to earth. NVIDIA is finally down quite a bit. As a matter of fact, let's take a quick look at NVIDIA. I think it's down like 15% or something like that. Let's see, last I checked. So from its all-time high down, it is down 20%. All right, so NVIDIA is down 20%. So, for people who might be looking to start a position in NVIDIA, this could be that potential price target. So moving on from that, we have Goldman also adding that the war-driven sell-off is improving a setup for U.S. stocks ahead of key earnings. So they're also saying kind of the same thing that Bill Ackman is saying. All right, after investors reduced exposure to U.S. equities last week, the distribution of near-term outcomes have improved, according to Goldman Sachs strategist. They said that the first quarter earnings season in mid-April will be key in providing clarity on the outlook and the impact of the Middle Eastern conflict. So really important, again, for people who are looking to add to their portfolio or start positions in companies that they've had their eyeballs on for a very long time. This could be that opportune time. Again, I don't see this V-shaped rally happening. Can it happen, right? Can it happen on the S&P 500 if Trump ends this war tomorrow, or Iran capitulates and just gives in to all the demands, which I highly doubt, not very high on the probability scale. Can the S&P 500, can the stocks rebound? V-shaped rally? I still don't think so. I really don't think so. Reading what impacts the global economy is going to have from this conflict are staggering. The ripple effects are going to be felt for months and months. It's not, a one and done. Okay, now we enter into this new bull market. We reach all-time highs. This is just like 2025 again. I don't see that happening unless, the entire market is in peak euphoria at that point, right? There are some real problems happening, not only in the United States with energy prices, but around the globe as well, especially in Asia. So all that is going to come, and it's going to stay for a while. So anyways, I'm investing. In case you guys haven't followed, he also runs a YouTube channel. Really recommend people check him out. I check out his videos or his live streams from time to time. I enjoy his commentary. But he says, Iran says they haven't had a single negotiation with the U.S. in 31 days, and markets did not like that. So from the actual Iranian foreign ministry, we have not conducted any negotiations with the United States during the 31 days of the war. What happened is a request for negotiations accompanied by American proposals that reach us through some intermediaries, including Pakistan. All right, our position is clear, and it is that we are dedicating all of our efforts to defending our sovereignty amid the continuation of American aggression. That American and Israeli aggression, it has been continuing, even though there was a supposed 5-day ceasefire, right? That has all still been going on. There's been large strikes happening in Iran. And of course, Iran and their proxy groups have been striking U.S. interests in the region, U.S. bases, a lot of energy companies still continuing to hit, energy production facilities within the Middle East, right? Some of them have kind of, started to stop doing that as far as, like Qatar, Bahrain, Saudi Arabia. Some of them have pulled back. They haven't been as drastic as the first 2 weeks of the war. But they're still happening nonetheless. Still a lot of U.S. interests, a lot of U.S. bases are still continuing to be hit to this day. Okay, so again, war not exactly just over. Cannot just be over. Iraq is starting to turn into another conflict, another front, because you have a lot of Iranian-backed militias who are supporting, obviously, Iran, and they're really starting to push on U.S. forces out there. So it's getting pretty spicy, all right? Also, Jordan is also, again, having to deal with the same stuff as well. Okay, so let me just check the chat real quick. He said it is not the Fed's responsibility. What the hell? JP is the man with a plan. He's the man with something, man. I don't know if he has a plan, though. Papa Pal, open the money printer. So I talked about this, and I mean, we covered this already, but whenever there's large conflict, and this is also a data point, right? When we talk about the big print possibly happening. So at the start of this conflict, the Iran, U.S.-Israel conflict, Pete Hegseth, Secretary of War, was asking for an additional $200 billion to fund this conflict, right? So I wonder what's going to happen with that, if that's even still making its way through, appropriations or whatever, the budget committee. But that would be part of this gradual print, right? That would be part of this gradual print. If we continue to see higher energy prices, things like that, that is going to be a case for another or for more, another gradual print, right? So, yeah, I mean, I'm liking this because if this continues, if this kind of stuff continues, I mean, this is, again, bullish for assets like gold or real assets, right? MLP or MLPI or, even Bitcoin, right? Bitcoin, a lot of people are saying that, Bitcoin kind of trades in alignment with, the money printer that goes on, or even global M2 money supply. So if that happens, again, I'm just glad that I have been and will be continuing to buy these assets as they continue to trend lower. I hope gold goes a little bit lower, because I would definitely like to add to my gold position. But anyways, yeah, I believe that money printer is going to be coming on in the very near future. Here we go. Sith the Mordor. Hey, welcome back. I'm throwing whatever extra money I have in my portfolio before the war ends. I feel like everything will skyrocket eventually. I think, yes, there will be a short-term bump, whatever that bump may look like. We'll see. We'll see. I don't think we're getting that V-shaped rally that we had in 2025. I think this is going to be a grind lower scenario until we hit that beautiful correction territory, and then probably a little bit more than that, 15-20%. And then we'll probably see something around the midterms, right? Some additional volatility, right? Because that's still on the plate. And then once, we understand what their agendas are, right? What the new politics agendas are, and where they're going to be spending money and saying no to, then, of course, the market's going to react to all of that. So then maybe by the last quarter, Q4, we could probably start to see, assets start to come back, right? When all of this volatility, uncertainty, all this stuff has been taken care of. But this conflict, again, is definitely going to play a part in the midterms. And, Trump is watching the stock market. He's watching the oil markets very carefully. And that is why he says the things he does, and does the things that he does, right? So anyways, let's see what else we got. Institutions, come back, retail. We promise not to rug you this time. Yeah, that's exactly true. That is exactly true, man. Let's see. Daddy Trump will make us millionaires. He's going to make us something. Let's see. What else we have? From Padre, CEOs buying their stock in company buybacks instill less and less faith these days. Does very little accretive for the company besides pump their own books. Yeah, I mean, I'm still under the belief that, when these companies do buy their own stock, that they're, obviously bullish on their own futures, because that's big deal. But I mean, you do raise a good point. It does, with all the red we're seeing, it does look less and less attractive. But, again, I mean, thinking again years in advance, right? Thinking years in the future. That's just, just a counterpoint, right? That's just a counterpoint is all I'm saying. All right, cool. Yeah, stagflation is next, says Sergio. Definitely agree with that. We're going to hit stagflation at some point. Okay, moving on. All right. So stock index futures spiked on this breaking news. Okay. As we see, let's just check futures again. I don't know if this is live. We'll see if it pumps. All right. So yeah, we're still in the green on the futures, almost a full percentage point. So U.S. equities futures surged Monday evening after a report that President Donald Trump is prepared to wind down the military campaign against Iran within weeks, even if the Strait of Hormuz remains closed. All right. So that is a huge deal. And again, this is why I think that the ripple effects are going to stay, and they're only going to probably grow, right? Because if the Strait of Hormuz remains closed, let's say U.S. assets leave the area, right? The carrier strike group, the 2 MEUs of 5,000 troops, plus the 82nd Airborne Division, let's say they all just up and leave, right? And this is where it also gets crazy. Like, Trump is requesting an additional 50,000 troops for this conflict. So take that for what it is. It's just, I don't know. You're not going to take over a country with, one, the 82nd Airborne, 2 MEUs, right? You're just not going to. And now the objectives have changed. Now the Trump administration is saying that they want to go in and take the uranium. At first, it was to take Clark Island or Carg Island, and that was a total bust. Right now, this is like, no, we're just bomb it. Right? They were never going to take Carg Island. When all the media outlets are talking about national strategy, right? Talking about, military strategy, and then it's probably a diversion. It's probably a full lie, right? But anyways, you never know with this administration who's leaking what, and if it's even true, because again, in the Gulf War, the first war, many people don't know this, but there were plans leaked to the media that the United States was going to do a amphibious assault, right? And so the Iraqis, what they did during this time was they fortified the entire coastline, wasted a lot of man and resources and power for this, when the attacks came from the south and from the west. So this has been seen before. Okay. In my opinion, it's probably the case for this time as well. But anyways, going back to this, the move comes after Wall Street Journal reported that Trump told aides he is willing to end hostilities on a 4 to 6 week timeline, prioritizing the degradation of Iran's navy and missile stocks over a more complex mission of reopening the strait. markets appeared to read the prospect of a near-term ceasefire as grounds for a risk-on move, setting aside the unresolved energy picture. So let's listen on what Caroline Leavitt had to say to this reporter. All right. So White House's Leavitt, the president commander in chief, the Pentagon has always stated 4 to 6 weeks estimated timeline for Operation Epic Fury. We're on day 30.
On the time frame, President Trump initially said about 4 weeks. Secretary of State Rubio on Friday reportedly said it might be another 2 to 4. Is 2 to 4 the current ballpark that the administration is thinking?
With respect to the timeline, again, the president, commander in chief, the Pentagon has always stated 4 to 6 weeks estimated timeline for Operation Epic Fury. We're on day 30 today. So again, you do the math on how much longer the Pentagon needs to fully achieve the objectives of Operation Epic Fury, which I will reiterate: destroy the Iranian Navy, destroy their ballistic missiles, dismantle their missile and drone production infrastructure, significantly weaken their proxies throughout the course of this operation, and then, of course, preventing Iran from ever obtaining a nuclear weapon.
So that's from the press secretary herself. All right, so moving on. This is the Post, right? This is the breaking news. The United States of America is in serious discussions with a new and more reasonable regime to end our military operations in Iran. Great progress has been made, yada, yada, yada. If this Hormuz Strait is not immediately open for business, we will conclude our lovely stay in Iran by blowing up and completely obliterating the electric generating plants, oil wells, and Karg Island, and possibly all desalination plants. For those who don't know what those are, that is what produces the drinking water. When you're in a very desert, hot, arid environment, you have to rely on kind of, the ocean for your water. If, you don't have exactly any rivers or lakes to speak of. So that would be a huge, huge problem. That could create some other problems. But again, I think this might be, I don't know. I think this might be a lie, to be honest. In all honesty, I think this is a straight up lie. But anyways, which we have purposely not touched. This will be in retribution for our many soldiers and others that Iran has butchered and killed over the regime's 47 years reign of terror. Thank you for your attention to this matter, DJT. So I think this is just leverage, for negotiations to get, the Iranians to capitulate. But in the past, Trump has said things like this and has followed through with it. So you're kind of stuck in a rock and a hard place at this point. So we'll see. But if that happens, that could destabilize the entire area. If you think Iran is just going to take it on the chin and then go on their merry way, that is a total lie. They will not stop striking assets in the area. They will not stop striking U.S. bases and U.S. interests. And speaking of U.S. interests, let's see. Did I cover that already? Hold on. We'll cover it, but basically U.S. interests in the area. Qatar's largest LNG facility in the world has an interest from ConocoPhillips, but we'll cover that a little later. So let's listen in on what Alliance's Mohammed El Arian has to say about all of this and how this Iran war could lead to inflation or stagflation, whatever you want to call it. Let's listen in.
Arian, professor at the Wharton School and Allianz chief economist. Mohammed, always great to see you.
Thanks for having me.
So, if you take a look at the bond market, the cues there seem to be shifting to a concern about growth, concern about longer inflation. Where do you stand on all of this?
So I do think we're going from a price shock to a price shock and a demand shock. And that's the economic logic of all these tipping points that are being triggered in the war. I must say, I'm more worried than the average. I'm more worried than the average because of the dynamics of the war. It's an asymmetrical war. You have 3 parties, now 4 parties, all of whom believe they're winning, which makes it very hard to end this war. And the US is the only one that can declare victory, but can't impose outcomes. And I also look at the economy, and I'm starting to see demand destruction that can accumulate. And if you go to Asia, they're not just worried about higher oil prices. They're worried about actual physical shortages.
Right.
And that is another tipping point for the global economy. So in general, I've gone from reduced risk to maximum risk off to now a few names look attractive, but I would not be going into the market and buying the index at this juncture.
When you talk about
So just for some, I guess, clarification, right? Regarding the Asian markets, you have gas stations that are completely closed up. You have the Philippines that has instituted a emergency, energy national energy emergency. So people, are encouraged to walk to work or work remotely. The same thing is happening in Thailand. And then jet fuel prices have been increasing. And actually, you have carriers like Vietnam Air that has actually reduced its flights in the area. Right. So, and prices are increasing. A ticket, from, Asia to America used to be about $1,200 to $1,300, and now it's about $2,000. And I'm speaking from personal experience. So the cost, these energy ripples are going to stay for at least a couple of months. And again, Qatar, and I keep talking about Qatar, but you also have Saudi Arabia. You also have Iran, right? You also have Iran, their own energy infrastructure that's been impacted or will be impacted. They produce a lot of energy for the rest of the world. And if you send half of the world into, some type of energy crisis, America is not going to be shielded. Europe is not going to be shielded from this. And you also already have Russia, where their energy infrastructure has been destroyed between the Ukrainian and Russian war. So China is also going to be impacted by this. The entire world is going to be impacted by this, at least for the foreseeable future. So even if this war stops tomorrow, it's not going to stop what has already started.
Demand destruction. Asia is talking about shortages. Demand destruction is happening elsewhere outside of the United States. We might be a long ways off from demand destruction. So how insulated can our economy remain, even if elsewhere in the world there is sort of this greater impact?
So we win in relative terms under virtually any war scenarios.
Relative terms don't mean that much to the average consumer or to the markets, maybe.
Right. But so the question is in absolute terms. I think there's no doubt that we are going to have not just an energy price shock. In my mind, we're going to have an inflation shock. Secondly, we are likely to see that inflation shock translate into less spending, particularly for the lower income households. So there will be a demand effect. If this continues, so you start with energy shock, interest rate shock, broader inflation shock, demand shock, then if this continues, which I hope it won't, we're going to be talking about financial instability. So that's the sequence. Hopefully we don't go all the way down. But
financial stability, that's the big print. Right. That's the gradual print that you keep hearing out there. Right. And that is extremely bullish for, in my opinion, gold and Bitcoin. So
that's the sequence that's been triggered by this war.
$200 barrel in oil. Amongst energy watchers, that had always been sort of the outlier scenario, but that outlier scenario seems to be moving a little bit closer and closer as this conflict continues, particularly because every day the war goes on, there's an increased chance that there's going to be terrible damage to infrastructure, which would create this longer shock to happen. So how do you think about that in terms of what that would be? Would that be the systemic shock that you're talking about? Would it have to be that dramatic?
So the first tipping point happened at the end of the second week when we went from disruption to damage. Damage means the tail is much longer.
Yeah.
And you heard Qatar come out and say 17% of its LNG exports have now been disrupted for 3 to 5 years.
Yeah.
There's also been damage in UAE, less so, but there's been damage, and there's also been damage in Saudi, less so, but there's been damage. So that's the first tipping point. The second tipping point is when we started seeing attacks on other infrastructure. So aluminum was an example over the weekend. That has resulted in a 6% increase in price. And we are starting to realize it's not just about oil, it's about fertilizers, it's about helium, it's about aluminum. There's a whole list of things. So I do worry that we are going to go to a broader shock. But the next tipping point economically is actual physical shortages. If we start seeing that in Asia, that will impact the US. So the US will now import higher products in terms of prices. And the question is to now see also a disruption in the availability of products.
So in terms of what markets are not pricing in, do you think that last week at CERAWeek, a number of the executives, including Mike Wirth of Chevron, had said that the oil markets are not pricing in what is going on in terms of the disruption to energy. Are we not pricing things in equities? Are we not pricing things in energy, in the bond market? Where do you go?
So you heard earlier, there's a massive differential between the physical price of oil right now in Asia, 140, 150, and futures.
Sure.
Okay, at some point, you need convergence to happen. Equity, we still have this mindset that this is transitory, that somehow, yes, there's going to be a short-term effect, but we should look through it. And then the third thing we're not pricing in is there's very limited policy flexibility. We've been bailed out by policy over and over again, whether it was the Fed, flooding liquidity or whether it was the fiscal. We don't have those degrees of freedom anymore. There's a real question mark as to what the Fed is going to do. And we're already running a 6% deficit. So the market hasn't quite realized that if this goes on, the policy offsets much less than what.
Market has not realized what the impacts will really be. So that's coming from Mohammed El Arian of Alliance. So real quick, just want to cover this because this came out about 7 hours ago and I have no news on. I was trying to look for an article that actually covered this. So take this with a grain of salt for now. But Bull Theory, this coming from Bull Theory. All right, breaking, the U.S. Senate has confirmed an April markup for the Clarity Act. All right, Senate markup is confirmed for the second half of April. Final passage is targeted for May, and Senator Moreno has warned that if the bill does not pass by then, digital asset legislation will not receive serious consideration again before 2027. The entire fight comes down to stablecoin yield. The current draft bans passive yields. Users cannot earn by simply holding stablecoins, which we've covered before. Activity-based rewards for payments and transfers are still allowed. So like your rewards, credit cards, if they produce any, that's where you'll see the earned interest, right? That distinction puts $1.35 billion of Coinbase's annual revenue directly at risk, and nearly 1/5 of everything the company earns. So this is why Coinbase has been very vocal about this Clarity Act, and they do not support it in its current draft, and why Brian Armstrong has been on this media circus or media circuit route, just telling everybody that this bill is kind of trash. Coinbase has rejected the bill twice and is now coordinating a formal counterproposal with multiple major crypto firms to get the language changed before the draft hardens. Not too long ago, you had the bankers, the big bankers, and the big crypto industry people meet at Mar-a-Lago not too long ago, and what came from that was, they came to a consensus on how this is all going to run. They came to an agreement, some things were given up, blah, blah, blah. And look, we're still fighting it, right? It's still being fought. All right, banks are pushing in the opposite direction. Jamie Dimon and Brian Armstrong have reportedly clashed directly over stablecoin economics. April is the window. Everything gets decided in the next 4 weeks. So the big thing here again is the yield on just holding stablecoins, right? You can earn a pretty decent yield. Whereas, money market accounts, savings accounts, all that kind of stuff, with the major banks, that all relies pretty much on the federal funds rate, right? The interest rate, which, can be pretty low at times. Why would I put my money or keep my money in these accounts when I could just move them to a stable coin and earn, 4.5% or 5%, whatever the staking yield or whatever the yield is for that stable coin. So that is really the big fight here. And, Jamie Dimon, again, I always bring this up. Jamie Dimon was out here talking about let's make the playing field fair, right? As if banks have always played on a fair field. So again, I just think this is really funny. In my, we've seen it in the chat before. We've seen it out there. The banks are pretty much scared about this, right? They're scared about people just leaving their ecosystem and moving on to things like Coinbase, where they can get a better yield on their money. So more to come from this for anyone who is following the Clarity Act and wants this Clarity Act to pass. Will this be the bullish catalyst for Bitcoin to finally break out, or Ethereum? Probably not, in my opinion. Probably not. For at least for Bitcoin, still following, and it still looks like the power law and the 4-year cycle is still intact. And this again is for stable coins. There's a thought out there that the stable coins are going to steal a lot of the thunder away from Bitcoin, and that couldn't be farther from the truth. Only because people invest in Bitcoin for a very specific reason. They don't invest in stable coins. All right. So, anyways, moving on from that, treasuries. Or let's see, we are at minute 43 for the stream. All right, almost close to the top of the hour. All right, so everyone was talking about treasuries. Okay, treasuries. Let's see if we can find them. Here we are. So everyone's talking about treasuries. The 10-year note was close. Actually, is this it? No, this is. I think this is it. Yeah, this has to be it. This doesn't show it. Hold on, let me go to CNBC. So everyone was talking about the 10-year note going to 4.5%. All right, that was a big worry. The last time we saw the 10-year reach this rate was back in Liberation Day last year, April 4th to April 8th, and then the Trump came and said, hey, we're going to put a pause on tariffs for 90 days. And then we saw the 10-year come down a bit, right? But this was very, very close to hitting 4.5%, which has not been seen in a very, very, very long time. So let's see if we could take a look at the 5-year. I guess it's been hovering around there. Okay, maybe I'm wrong. Well, yeah, here's around, this is when Trump came in. Okay, so maybe I was wrong about that. Okay. Anyways, yeah, we haven't seen it since, let's see, 2023. If we look at all, Jesus. Yeah, this is 2007. So you guys know what happened around that time period. 1981. All right, well, hell, I guess I learned something new. So anyways, 10-year treasury was spiking back up to 4.5%. And then it looks like it came down, right? It came down quite a bit. And this is the possible reason for that, right? Middle East has been selling a lot of U.S. treasuries. And basically the net of this is because oil right now is kind of on pause, right? They can't ship a lot of their oil. So that's no income. So these, Middle Eastern governments, they have to raise cash somehow. So they have to get liquid. And by getting liquid, they have to sell these U.S. treasuries, right? So by doing that, that's actually brought the treasuries down a bit. Okay, so major oil producing countries in the Middle East have been reducing their holdings of U.S. government debt since the U.S.-Israeli war against Iran began on February 28th. And the reason appears to lie in the need to get more liquid. All right, the need for liquidity following the outbreak of the war can be seen in other parts of the financial markets, such as equities, which have fallen for 5 straight weeks, credit markets via redemption demands on funds, and corporate bonds, where credit default swaps are being used to hedge the risks of the Middle Eastern conflict. All right, so we see that the 10-year has actually been coming down. You don't want this 10-year influences a lot of corporate debt. It also influences the commercial real estate sector as well, right? It influences long-term debt, for like mortgages for commercial real estate. So that is obviously not good if it's at these levels. And we were just under 4% not too long ago, right? March 2nd. So that is the reason for the bond coming down, which is a good thing, right? We want a lower 10-year bond. So moving on from that, let's see. Do I want to cover this? Let's see. So want to check the chat real fast. Going back to the Clarity Act, I moved my entire banking away from traditional bank. Banks are not happy. Too bad for them. I agree. Screw a lot of these banks, especially Bank of America. Let's be honest. There is risk in owning crypto coins, and with banks, there is limited risk, if any. Again, speaking on the Clarity Act. All right. So what if you earn 4% on a coin if the price drops to 40 or 50%? Well, that would be true, Wolf. But with stable coins, they're pegged, right? They're pegged to the US dollar, right? So they trade flat. They don't go up or down. Unless, US treasuries go to zero, then I think we probably in a bigger, deeper thing than, like the humanity is probably not going to survive at that point. If all of U.S. treasuries went to zero, the country is probably not going to survive at that point. But yeah, I mean, it is a good point, right? I do see your point. But again, when you look at what a stable coin is, it doesn't fluctuate. It doesn't go up or down. It's not supposed to go up or down. It's supposed to stay flat at $1. So let's see. We also have from Padre, I think the banks are scared, which one of them is going to be the next Lehman Brothers and who is going to be Cutthroat. That is absolutely true. Too big to fail, right? That always comes to mind whenever banks, at least in my mind, whenever banks are brought up, JP Morgan, Goldman Sachs, Citigroup, all those other big banks. I don't know, man. The U.S. government they're gonna print their way out of a problem, right? We did see Silicon Valley Bank go down, which was a big one, right? That happened 2 years ago. We saw Silicon Valley Bank, a couple regional banks start to come under a lot of pressure. And what did the United States government do? Right? They said, "Oh, it's not at the taxpayers' expense, right? We're not gonna bail these banks out, right? It's not another 2008, 2009 crisis, but." Still, you had government intervention. You still had government policy come in and save a lot of these regional banks, right? Except for Silicon Valley, which ended up getting, I think, acquired. So Wolf also says that doesn't mean I don't own some coins and stake them, but my coins have also dropped. Yeah, I think a lot of coins have dropped. I mean, you have altcoins, the shit coins, the meme coins, and of course, the top 5 coins. For me personally, I don't deal or dabble in all those other coins. I just do Bitcoin and Ethereum. Really, I'm bullish on Ethereum. I don't do Litecoin. I don't do XRP. Although I would have said XRP would have been the most utility driven coin out there with a real use case by banks. But with the stable coin legislation, Clarity Act, I think they're going to subvert the XRP entirely. That's just my thought. All right. I'm not here to, bash or go against anyone's thesis for investing in XRP. Like I said, I think of most of all the coins, XRP had the best utility out of pretty much all of them. But again, it looks like more and more banks are moving on to the Ethereum rails and they're adopting stable coins. So I mean, you kind of do the math from there. Alternative banking strategies are showing the underpants of banking in a traditional way. The limitation of risk is by FDIC, not the banks themselves. And then Padre says it'll be a bail in instead of a bail out. And I wonder who's investing in all these banks, right? Who has large investments in some of these banks, right? You don't have to look very far. It's definitely some politicians out there. So they're not going to let their investments go down. Okay. So moving on from the bonds, let's talk a little bit about the ripple effects from this conflict and what gas CEOs are thinking. Okay. So real fast, here's a quick summary. Oil industry executives painted a grim picture of the Iran war supply disruption at S&P's global annual CERAWeek energy conference in Houston. They warned that the disruption is bigger than the markets understand, and the prices are unlikely to return to pre-war levels soon. The disruption to jet fuel, diesel, and gasoline is even bigger. Shortages are rippling through Asia and will hit Europe by April, they said. Security experts said escalation of the war is likely. The conflict could break the Gulf Arab nations' economies. So when we talk about ripple effects, this is what we're talking about. Okay. Asia and Europe will face fuel shortages if the war drags on. The executive said oil prices are likely to remain high if the conflict ends. High, even if the conflict ends, as countries restock depleted reserves. You can't just take 8 to 10 million barrels a day of oil and 20% or so of liquefied natural gas LNG market off the world stage without having some significant repercussions. This is coming from ConocoPhillips CEO Ryan Lance. All right. Iran has basically imposed an economic blockade against the oil producers in the Middle East by closing the Strait of Hormuz, said Sheikh Nawaf Al Sabah, the CEO of Kuwait Petroleum Corporation. The strait is a vital artery that connects the Gulf Arab producers' oil exports to the global markets. This is an attack not only against the Gulf, but it is an attack that is holding the world's economy hostage, Al Sabah told the conference. The CEO warned that the war will have a domino effect across the global economy. The costs of this war don't stay within geographical lines in this region, Al Sabah said. They extend all the way through the supply chain. So going down a little bit more, call for U.S. military to protect the energy. All right. Energy Secretary Chris Wright told CNBC that the market is facing a short-term period of disruption. Short-term, right? The price is worth paying in order to achieve the long-term benefits of defanging Iran, he said. So basically destroying all of Iran's military infrastructure, basically just dismantling their entire military, right? As well as their offensive capabilities, missile launchers, etc., and missile production. Iran has forced the closure of the world's largest LNG gas hub in Qatar with drone attacks, and ConocoPhillips is a major investor in that facility. All right, oil prices to remain high. Oil prices settling Friday at their largest level, their highest level in more than 3 years. U.S. crude oil prices have surged 49% to $99.64 a barrel. All right, Brent prices, the international benchmark, have soared more than 55% to $112 per barrel. Chevron CEO Mike Wirth, the physical supply of oil is much tighter than prices in the futures market indicate. The market is reacting based on scant information and perception, the CEO said. There are very real physical manifestations of the closure of the Strait of Hormuz that are working their way around the world and through the system that I don't think are fully priced into the future curves on oil. And this is the CEO saying this. All right. It will take 3 to 4 months for Gulf Arab countries to fully restore production because they had to close down oil wells due to the strait's closure, Kuwait Petroleum CEO Al Sabah said. Fuel shortages. Okay. Fuel supplies are facing an even bigger disruption than oil. The war has triggered a ripple effect of shortages that is spreading across major Asian economies and will reach Europe by April. The CEO said the governments around the world are stockpiling and protecting their own supplies. Jet fuel and diesel prices have surged $200 per barrel and $160 per barrel, respectively, said Total Energy CEO Patrick Poyan. China has banned oil product exports, and Thailand is rationing gasoline, he said. All right, so when we talk about ripple effects, the global economy, and the effects of what this Strait of Hormuz has, and not only that, but the closure of some of these large facilities in the Middle East, that is what we're talking about. All right, so I just wanted to share that article. I thought it was very valuable. It's very informational for you guys, for the audience. We're going to skip this. Yeah, we'll skip this. But recession odds in 2026 are jumping nearly to 40% on the prediction markets. All right, and that's on Kalshi. If we look at the American Association of Individual Investors, we see that, over the next 6 months, investors are still pretty bearish. Okay, with 18% being neutral last week during the last reading and 32% being bullish. Okay, so sentiment out there is still very bearish. Okay, so I just wanted to share that with the audience. Micron sinks 10%, further cratering and post-earnings sell-off. Again, Micron had a great earnings. Right, I think they tripled their revenue or something like that, and not only that, they have a back order that's basically filled. Right, NVIDIA, AMD, all these large semiconductor companies, they rely on Micron for their memory, and Micron, even though they reported great earnings, they're still having a huge sell-off. The stock itself is down, I think, 30% from its all-time high. And again, it has not done anything wrong. And this is just the market, again, that steep incline, and then you're going to have that even steeper decline, right? Down 30% from its all-time high over the last year. It is still up 270%. All right. So for anyone who is in Micron, I tip my hat to you. I hope the stock comes back up, especially if you're one of the people who bought in on hype at the top. But again, the story for Micron is there. There's only 3 producers, again, that I know of that produce this specialty RAM, and that is Micron, that is SK Hynix in Korea, and Samsung Electronics. And then we also have selling pressure intensifying as now nearly 300 companies of the S&P 500 names trade lower in 2026. Some of the highlights here are the Mag 7. All right, Microsoft down 25% year to date, Tesla down 20%, Meta down 18%. Meta had a really bad sell-off. It was pretty brutal. Alphabet down 12%, Amazon down 12%, NVIDIA down 10%, and Apple down 9% all year to date. Okay, so the Mag 7 is going down. So if people are asking why Maggie is going down, well, there's your answer. All right, NVIDIA valuation falls to S&P 500 parity for the first time in over a decade. So this is why I was talking about earlier. For people who might be interested in starting a NVIDIA position, this again could help lend to that reason. All right, NVIDIA's forward price to earnings ratio has tumbled to match the broader S&P 500 for the first time in more than 10 years. According to a Goldman Sachs trading desk note circulated Monday, the chip maker, which has dominated the artificial intelligence boom, now trades at par or a slight discount to the index on a forward PE basis, despite its outsized role in driving market growth. All right, and this is a big piece right here. Goldman analysts highlighted a striking disconnect. NVIDIA alone is expected to contribute about 21% of the S&P's 500 total earnings growth in 2026. Yet investors are no longer paying that premium for that growth. So people are turning bearish on NVIDIA. People are selling NVIDIA for what? They're selling it for energy, right? They're selling it for energy because of all this crazy crap that's happening. The entire semiconductor sector has just been getting sold off, right? And we see that here. And we see that if we look at the 1 year, actually we look at the year to date. The 1 year, we look at its last high, down almost 15%. So people are selling out of some of these big names and flocking to, it looks like, energy, or they're holding cash, right? Last time we looked at, the ICI money market funds. The last time we looked at this, it looks, we're still in this, $7.8 trillion of dry powder that's sitting in money market accounts. Okay. And that was as of March 25th. So it looks like it decreased by $53 billion. So that's probably some dry powder being deployed. But it's still, there's $7.8 trillion on the sidelines. So that will conclude this stream. Let me just check the chat here. Let me see if there's any. I'm gonna keep this up in case. Let's see. I'll keep this up right here. Let's see. So from Sergio, alternative banking strategies are showing the underpins. Actually, we already covered that. We covered the bail in, and we have from Champs 1232. Is anybody in the green? That's a great question. I am definitely only in the green on my gold position. That's the only thing in my entire portfolio that is even remotely green. Everything else for me is red or deep red. But I'm gonna just continue holding them because one, conviction. I'm not gonna sell at the bottom, guys. Like I refuse to sell at the bottom. One of my biggest losers right now, obviously, is MSTR, right? Or MSTW. That's my biggest loser, but I still have a lot of conviction in that company, and I still have a lot of conviction in Bitcoin, and I still have a lot of conviction in this cycle that we're about to enter. It's going to be crazy for at least Bitcoin. At least I'm hoping it is. There's still the narrative out there that because of institutional adoption, that Bitcoin's volatility is going to be dampened a bit. So we may not see those really, really crazy face melting rips to the upside that we used to see in the past. And that's because of large institutional adoption or the IBIT shares, the FBTC. You also have Morgan Stanley that's coming out with their own, but you got to think like they have not told their clients to add to IBIT at all or to add to Bitcoin at all. At some point, these wealth firms, these wealth management companies, et cetera, these advisors may in the future recommend to their clients to at least have a 1% allocation. That could be massive for Bitcoin. That could be huge because that is going to be a lot of passive flows, not only into these ETFs, but passive flows into Bitcoin. So when we talk about volatility dampening, we're talking about people who are just hodling, who are just holding on, right? And they're adding here and there, they're adding here and there, right? The leveraged players, the leveraged people, that is what's adding to the volatility. That's what adds, to the volatility of Bitcoin is people trading it. And I think I saw an article somewhere out there saying like Bitcoin has like, what is it? So there's 21 million coins, but there's only 4 to 5 million coins that are free float, right? That float out there, and that's used for trading. That's for people just buying and selling and getting in leverage trades. But outside of that, there's 1 to 2 million coins that are lost, in people's wallets that lost in a dump, or had it on a hard drive, then they formatted the hard drive, or they had it on a thumb drive and they put the thumb drive in their pocket and then put their pants in the dryer, right? So there's still like 1 to 2 million coins that are lost, and then the rest of the coins are held by people, right? And if I'm not mistaken, out of the 21 million coins, 90 to 94% of them have already been mined. So they're already available. They're already out there. So there's not that many coins left to be mined. But before the last Bitcoin is mined is going to take decades. It's not going to happen next year. So we'll see what Bitcoin does this cycle. Again, I'm still very bullish on Bitcoin myself. From Sergio, I heard people in helium stocks are in the green, according to Quant Vic. Of course, he is up. Let's see. I am 2% up year to date, says Project 2030 Thailand. I like that. I like that name, 2030, Project 2030. I like it. I love it, man. Well, you know what, guys? It is, let's see, what is today? Also, yeah, today's Tuesday, so it's still Monday, Eastern Standard Time. So it should be about 10 p.m. your guys' time, I think, on Eastern Standard. So I will put this guest down in the YouTube chat if anyone does want to come on and share some thoughts on today's stream. But outside of that, I'm here for another 10, 15 minutes before I have to take off. So I'll just put that there in case anyone does want to come on. Let's see if we can find any breaking news, because usually that news comes out after the market has been done. Let's see. Let's see. So I see that BM&R purchased some additional Ethereum. So that, I mean, that's nothing really new there. That's funny. So this is coming from Centrini Research. Trump is actually playing 5D chess by knowingly posting fake tacos that he knows will get faded, so that when the real taco comes, people short into it and ensure there's fuel for the rally. Holy hell. That is awesome. That is awesome. Let's see. I've been catching up on my Netflix shows these past couple of weeks. Man, I'm so far behind on Netflix. I can't even, I can't even like really catch up. I'm never going to catch up. I mean, hell, even on Disney, the whole Star Wars series that came out. I mean, you have like 5 different series that came out. You had the Clone Wars, you had Boba Fett, then you had Rebels, and you had, oh my God, you had a bunch of them. Andor, like I have not even watched a single episode of any of them. Or the Bad Batch, I haven't watched a single episode of any of them. And I like Star Wars. I'm a huge Star Wars fan, but I have not even watched a single episode. My YouTube watch list is starting to outgrow me, because I can't even spend enough time to watch it. If I go like on a walk, or if I'm driving somewhere or something, I'll have the podcast on. But I don't get through enough of them. So I'd be like, man, I'd be falling behind. Not enough time in the day. Let's see what else we got. Some Stanley Druckenmiller, but I think this is old. You know what? Here's a topic for people. Do you guys believe in diversification or concentration? That's the question. And diversification or... So that's a question I want to post to the group. I'm not going to do a poll, but I'm just curious. Do you guys believe in diversification or concentration? Now, when we talk about diversification, we're talking about, probably several different like sector-based ETFs. You can have a couple, your high conviction picks in there, right? But usually you're investing in broad indexes, right? Maybe you'll have some gold, you'll have some bonds, you'll have the S&P 500, you'll have some tech sector ETFs or a thematic ETF or something like that, right? But that's really the concentration, or excuse me, diversification. Or do you guys take the route that you concentrate into a few high picks with your biggest conviction, right? Your strongest conviction. Do you take that route? Because I think that's an interesting topic of discussion. Is the diversification versus concentration. So let's see what we have from Druckenmiller here. So this is coming from Wolf Financial, but Stanley Druckenmiller once shorted $200 million worth of internet stocks in the 90s. 3 weeks later, he covered at least a $600 million loss. Every single one of those 12 stocks he shorted went bankrupt. He was right on the thesis. The market just wasn't ready to agree with him yet.
Our shorts have been fine this year, except my index shorts, which have been a disaster. But we always short the same way. I just try and look at the current situation, and then I try and think of a situation 12 to 18 months from now based on my forecasts. And I think if I think the security prices are going to be less, then I short them. Frankly, I'm not sure I've ever made money. When I was at Soros, I shorted $200 million worth of internet stocks in March of '99, and in 3 weeks covered them at a $600 million loss. I lost $600 million on a $200 million investment in 3 weeks. I was short 12 stocks. They all went bankrupt, every one of them.
Don't try that at home.
So just for those who may have possibly heard the phrase, I believe Druckenmiller said, have all your eggs in one basket. Just watch the basket, right? Just watch it very carefully. And that's what he's talking about. Concentration. You could have your high conviction picks, but you need to be actively managing your portfolio. So I see that we have from JVMZ, he goes with diversity or diversification for a portfolio. And then we have from Sergio, diversification is king for me. And then we have from Project 2030, aka Julio, all I own are ETFs, mostly tech and semis. Now I'm adding XAR, which is defense stocks. XAR, I don't think I've ever seen that ticker before. Let's take a look. Oh, maybe. I don't know. Let's see if it's ever come up here. Yeah, guess not. But looks like probably a more thematic ETF. So this is the Spider S&P Aerospace and Defense ETF. Let's see. Year to date, that's probably its blow off top, down 17% over the last year. Yeah, so that was a blow off top. So let's see what's up in this ETF. I'm just curious. I'm sure I've probably seen it. I don't recall seeing this though. So aerospace and defense ETF seeks to provide investment results that before expenses and fees correspond to the total return of the aerospace, defense, and select industry. All right, let's see what some of these holdings look like. Yep, the usual suspects here. General Dynamics, Lockheed, L3, Textron, Northrop Grumman, Carpenter Technology. That's new. I've never heard of them. Yeah, Huntington Ingalls. I won't be surprised if you have General Dynamics. Man, like, again, me thinking out loud, I'm just thinking out loud. The government spending super cycle, as I'm calling it, right? The government super cycle. Everyone, like the administration is going to be spending money over this administration, right? Definitely over this administration. But if it turns into a blue wave, they lose the midterms, it's going to get harder for, I think it'll be bearish for defense contractors if the House is lost. Or if the midterms are lost, I should say. If the midterms are lost, and definitely Americans paying for a lot more in gas and goods is definitely not looking good for this administration, because they're pissed. I would think Americans are pissed at what's happening right now. I mean, I'm not gonna bring my personal politics into this, but just objectively looking at it and an observation, from what I'm just seeing on X or even, my own social medias, people are just not happy with how much they have to pay for gas, right? Definitely not happy. They don't care about a war. They don't care about the reasons for it. They care about what's happening to them right now and then. And right now and then is that they have to pay more, and they have to decide, between paying for lunch or paying for gas for the car. And people, if this ripple effect that we covered in this stream continues to last, for a couple more months, I mean, you could pretty much guess what's going to happen at midterms. 200 billion directly going to those ETFs. Yeah, the 200 billion you're referencing is the Department of War requesting $200 billion to fund this, war in Iran. And I wish I saved the damn clip, man. There was a really awesome clip, and it was about Raytheon. It was about Raytheon. When Raytheon, let me see if I can find it. It's like when you hear missile stockpiles are getting lower or depleted, you just see Raytheon going higher. Let's see if I can find it. Oh, man, I really hope I can find that clip. Nope. That's a missile strike. Oh, man, I can't find it. Damn, it was funny. But Palantir is also selling off right now. So maybe the whole prospect of, this war coming to a conclusion is bearish for Palantir. Or maybe it's just getting sold off along with pretty much all the other software companies. Damn, I wish I could have found it. Yeah, so I mean, I personally drive an EV, and the EV, thankfully, I'm sure I'm going to get a higher electricity bill, but it pales into comparison. Like, you'd be driving, you'll see a gas station closed, you'll go to the next gas station closed. and you'll see the one gas station open, and there's just a line all the way down to the street, right? And they've already closed off the diesel. Like there's gas stations that don't carry diesel anymore. So now you have this long line of cars trying to get gas, and they're rationed. They're only allowed a certain amount, right? On top of gas increasing already, I think closer to 30% for just regular, regular gas. So it is getting pretty nasty where I live. And thankfully, I went with the EV model versus a gas model, because I was really debating going with a gas a gas car, of course. But man, they make EVs so damn nice. Like I don't like China for a lot of reasons, when it comes to, geopolitics and kind of what they do to, private companies. But I gotta say, I mean, hell, they're giving Tesla a run for their money, because these EVs are coming out with definitely give a run for Tesla. Like, why would I pay a premium for Tesla just for their name, when I could just buy this EV that has all the bells and whistles that a Tesla has, minus the autonomous driving, which I could care less about. And you're paying less as well. You're paying less. So I drive. It's called Chery. Chery is the brand. I don't want to give away the model. I'll DM you the model that I have. But yeah, I mean, it's pretty damn nice. I'm not gonna lie. And I mean, there's other ones out there. There's Jaku or Jaku. And that EV is pretty nice. But again, like, you could charge at home. You don't, and the charging stations, they're everywhere, right? They're at gas stations, but you have to get through the gas line to get to your charging station. So, but you could charge at home, right? And again, you're gonna have some higher electricity costs, yeah, sure, but you're not gonna be spending hours in line at a gas station. So I mean, there's a convenience factor there, which I'm a fan of. All right, ladies and gentlemen, I think that will do it for this stream. All right, I appreciate you guys for joining. To the 30X viewers, shout out to you guys. To the 26 YouTube viewers, shout out to you guys. All right, I do appreciate you guys joining me for the stream, as always. You guys have a great rest of your evening, great rest of your day, wherever you are in the world, and I will see you guys in the next stream. Take care, and definitely let's hope we get some green light therapy instead of red light therapy. All right, guys, take care.